Good afternoon, ladies and gentlemen. Welcome to Cereals. What I want to do quickly for just 4 or 5 minutes is just give you a rundown of some of the market drivers we have in place at the moment and some of the reasons why we're seeing these quite big market movements. I haven't got time to go into everything, so after the tour, please feel free to come and talk to us within the team, and also please make sure you're receiving our weekly market report. Basically, is a compendium of all our information on a weekly basis. Not enough time also to cover oilseeds, but we do have our oilseed specialist here today, David Udall, so please feel free to come and talk to him later. A quick update on where we are in terms of prices. NOV 11 feed wheat futures around £178 a tonne, so slightly up this afternoon by around 75p. November 12, we were about 158, and interestingly, in about a month's time, we'll see the November 13 prices become available and be providing pricing information for that harvest. Back to the here and now and the current crop we have in front of us, the prices for that have increased by around £60 a tonne on the feed wheat since the crop's gone in the ground, and that's really been fallout from what we saw in 2010 because of the tighter supplies, predominantly from the Russian export ban, but other issues following on from that. Middle of March we saw a bit of a wobble in markets because of what was going on in Japan, but also what was going on in the Middle East and North Africa, two really key importing nations of the world. Since then it's really been about the spring weather in the Northern Hemisphere and really the impacts that's been having on some of the key exporting producers around the world. Production wise, the world is currently expecting to produce around 1.6 billion tonnes of grain. That's wheat, maize and barley. That would be one of the largest grain crops we've seen if achieved in the world, but still quite a lot of uncertainty because of the weather issues that we've had. And particularly we've had issues with wheat producers but also maize producers as well, and maize is providing a lot of the volatility we're seeing in grain markets currently. Interesting though, although this is expected to be one of the biggest grain crops we're producing, prices are remaining historically quite high, and that really comes down to the fact that demand continues to increase, around a 2% annual increase in demand continuing, and that's really coming from growing population, a world population that's getting wealthier, wanting more meat, pork and poultry, which of course is requiring more grain. Also, in line with that, we're seeing stocks continue to be degraded, and if we're looking at the current projections for June 2012, the level of stock relative to grain demand, again this is wheat, maize and barley, is expected to fall below 20%, and it very rarely has done that historically. So a very fragile stock situation, which essentially means that production increases are going to have to come through to meet the increases in demand, and that gives us a direct linkage between weather and the markets, and hence we can expect to see continuing volatility in these markets. And I hand you over to Sarah.